Good morning.
All right. Well, welcome everyone. Happy holidays to everyone. It's so great to see everyone's faces during this time of year. We are in our final Swiss Re Forum. And so this is the third of the four. I think the last three have been really, really successful. And I'm really excited for this one because this is one that I think Total Financial has done very well with. Large and jumbo cases, something that Diana and her team has done for years, and this one falls near and dear to many of you on the call have experienced what Diana and her team has done. But I think it's important that we hear from the reinsurer standpoint on what's happening behind the process. So I'm super excited for this. So why don't we get it kicked off? I'll turn it over to Miss Diana, and we'll get rolling.
One quick question, Scott. Are you controlling this? I see, somebody moving that little arrow around. I just want to make sure we're not being hacked.
Oh no, that's being.
No, that's us.
Yeah,
okay.
That's us. Okay.
All right, I'm in.
Okay. Good morning, everybody. Thank you all for being here. I'll echo what Scott said. Thank you all for attending all the ones that we've had. Yes, this one is very near and dear to me because, for as long as I can remember being in the business with my father, all I remember is him quoting retention, automatic, and jumbo limits every single time an agent would call and ask to do a case. So this has been my life for the last 40 years easily that we've been doing this. And I think it does warrant a lot of time to be spent on it so that the agents can really understand what's involved from the reinsurance side, what is actually happening with the insurance company that you're applying to and their amount that they're retaining, and how we should be processing these large cases, which will be the most beneficial way for you. Because there's a lot of times that I get these cases and people come to me and they've already saturated the market, which it totally ruins the case from a reinsurance standpoint, because it's already been seen by multiple people. So I thought it warranted time for us to spend and really talk about how to do this correctly and the difference between the parts between the reinsurers and the carriers. And you guys are all going to be lucky enough to see how that's done and how that's applying to, yes, a lot of the cases that we've been working on lately. So thank you again. We are very lucky to have Mary, who was on our last call, Mary Hansen. And we also, again, of course, have Nicole Myers on the call, and Dan is somewhere on here. I can't see him, but he's also on here. So thank you both for having this done. And I really appreciate it because all the people on here really do work in this area. And I will just let Mary take it away. And let's just start with the basics and then we'll work into it.
Yeah, thank you so much. And thank you so much for attending and interested in this opportunity too. But so a goal that I have from this presentation is to help you be able to process these large cases more efficiently, helping underwriters and through that process. So please ask any questions as we go. Happy to answer. We do have a question slide at the end, but also, go ahead and stop in those areas too if you have specific questions. That's why we're here. So to start, we just wanted to start out and kind of level set and have everybody on the same page with the definition of jumbo. And jumbo is actually the total in-force amount plus the amount applied for on the application you're working on, plus any pending applications. And most companies and carriers have a specific jumbo. The majority in the industry, and probably the ones you deal with the most, have a $65 million jumbo limit, which means that if they add all that up and it's below 65 million, as long as it meets their auto bind limits, they can auto bind without having to send to facultative for the reinsurers for capacity. Once they get over that jumbo limit that they have, then it automatically has to be sent to reinsurers. And the reason we do this is to control our risk. The carriers need to control the risk. The reinsurers, we need to control our exposure in this too. I guess I should give you a little bit of my background too, so that you know I've been in reinsurance for over 20 years. I've been in the industry for over 25 years. And with the majority of my, obviously, the majority of my career has been in reinsurance. And I've worked for, previous to Swiss, I worked for another reinsurer. So I do have a couple different perspectives on this too. The previous reinsurer had a smaller capacity, and then Swiss has a larger capacity. So even can take it a step further and go into retrocessionaires if you have questions on them too. So feel free to ask. That's why we're here. But we want to control everyone's exposure in a risk. So so that we can make sure claims are paid appropriately and no one's going bankrupt paying a large claim, but and protecting the insureds. So they are
define your risk. You can retain higher risk with Swiss Re. Give us numbers, if you don't mind.
Well, every offer, it's dependent on carrier because it's a proportion to their retention too.
Okay, so if they can carry 65 million, what are you willing to do?
We have, well, right now we have COVID, so 40 million is our max that we'll retain.
On top of the 65 million?
Well, if they shop it, if it's over 65 million and they shop capacity, facultative capacity, our max capacity right now is 40 million.
Okay, thank you.
So if a carrier has a $20 million retention, and that's the total exposure on a life too. So if we have in-force coverage, that's where that's where this presentation ends up going as, well, okay, you factor this in, you factor that in. But if there's in-force coverage, it's taken off of that 40 million. But if they come in straight up, no in-force, no other applications or anything, and apply for the $65 million, we can participate a maximum up to 40 if they qualify medically.
Thank you.
And then the direct carrier will keep their retention. So they've got 60, and then sometimes they'll need to go out to another reinsurer to get the remaining amounts.
Yeah. So Isaac, just so you know, obviously we're only just talking about Swiss here. So, if you're taking the 65 million with John Hancock, and then you're getting the 40 million from Swiss, you're going to go to the other 5 reinsurers that, I can name off the top of my head.
Do you mind name them? I'm thinking January.
There's Hanover, there's Gen Re,
Munich, Swiss, RGA, yeah. SCORE.
Okay, so you can go to other reinsurance.
And each carrier has agreements with different reinsurers.
Okay, good. Thank you. Sorry to interrupt you, but we got to know.
Yeah, no, and if I use jargon that you don't understand, please, ask me and I'll explain them. So our agreements we call treaties. So we have, each carrier has treaties with reinsurers, and it depends on which they call pools. And so they may have 5 reinsurers in a pool. Some may only have 2 reinsurers in a pool. It just depends on their target markets and what their needs are.
Okay, thank you.
Okay, so before you go on to the next slide, which is probably going to be really important, I just want to make sure and just re-emphasize and echo, because it does come up so much. You must always account for the insurance that's in force. And even though you are intending on replacing it, and you're saying to me, but that shouldn't count because we're replacing it, it does count. Now, there are certain things that happen, whether it's a 1035 exchange versus a replacement, and we'll talk about that, of what needs to be done when that happens. But if you guys don't know now, it is absolutely would be the worst thing that you could possibly do. And I always try and say this to you when you call on these, is not to shop the market. Because if you're going to put apps out to all of these carriers, every single one of those apps is going to be considered a pending application. And that will all go into the amount that the company is considering for, even though you're saying, I'm only going to place 1 or 2.
So you want to send you a trial application always?
No, trials don't count.
Okay.
And we don't go to reinsurance with trials.
So if somebody wants the 200 million, how are we going to do that?
Hold on, we'll walk through.
That's going to come up. That's coming up.
We'll walk through a large case, and that's an example. This information right here is just a level set and get everyone kind of understanding the overall process. Okay. And what goes into it. So the replacements can come, you include in the total the in-force. Now, if they, and 1035s were explained. So 1035 exchanges, because they're a collateral assignment and a control by the carrier, can be subtracted out for the jumbo total. Did I just confuse everybody?
No, you said that right, because it is being assigned over, they have control over it, as opposed to someone just saying, I'm replacing, and then you don't know whether that happens. Actually, at the end of the day, the person could decide not to move forward with the replacement. The 1035, so it's a contract. So
right, the term policies are surrendered, but those are surrendered by the owners of the policy, not controlled by another carrier. So those aren't guaranteed replacements. So those need to be included for the jumbo. So typically a perm product with a cash value, that's a 1035 exchange, you can subtract it from the jumbo. But if it's term or a non-cash value product, you would err on the safe side and add it in for your total jumbo.
Okay.
Got it.
And so, well, I was going to say, I've got a few more things. The capacity on number one, the capacity, this is regulated. Regulators get involved to make sure to protect the insureds, to make sure that we can pay claims. Direct carriers, reinsurers, and retrocessionaires all have capacity and retention limits, and it's all to protect that. Some of the pools that are set up, we have what are called excess pools. So those are pools the carriers have above their retention. And then there's also, and this might be getting too much outside of what, but there's a first dollar quota share too, where a portion of each policy is pooled out to reinsurers until the carrier hits their maximum retention. So those are a couple different treaty setups that we have when we contract with carriers. And then FAC, and we'll get into this a little bit more, but FAC is, and you guys know this, FAC is shopped either to look for a better offer and improve the underwriting class due to an impairment. It could be purely a capacity need. And for these large cases, typically that's what it is, it's capacity. But from the reinsurance standpoint, we have one more step that we consider, and 9/11 brought this on, and it's accumulation of risk. So business partners, family members, the high profile family members and people, it's the more details we can know, the better. Like, how often are they in the office together? How often do they fly together? Do they go on vacations together? So that we can understand if we are underwriting $100 million on 4 family members and they're all on a plane together, if that plane were to go down, Swiss could have to pay a very large death benefit. So those are the things that reinsurers are looking at as our total exposure in the event, in case there's a major event in these.
And that just changed recently, because I mean, I've been dealing with that with like team insurance before, obviously from that perspective of having a team on a plane, but now you're saying that they're taking it into the personal sector as well.
Yeah, 9/11 brought that up, and it brought it to the front. I mean, it's always been there for us, but when 9/11 hit, it just, concentration of risk and accumulation of risk really became a discussion among reinsurance.
Mary, to use your example, if you have 4 members, 100 million each, do you refuse to insure all of them, or would you put a condition such as you cannot travel in the same plane together?
We don't put those conditions because in the US, we have such tight regulatory rules that everything, you can't just put an amendment or something, a condition like that. Everything has to be filed. But what we will do is we may pull back on our participation on each life. We may say, in some cases, we've gone out, and said, you have X amount of capacity for this whole group, and whatever the carrier needs to do to split it up to get to the total is what they'll do. Or we may say that we'll give you X amount for each of these family members or these business partners. But there's maximums that we have to consider when we're looking at accumulation of risk. And it really comes down to how often they're together. I mean, if you take business partners that go into the office day after day after day, and they're there every day together, think back to 9/11, the World Trade Center. Think of the executives all sitting in that office. If we had even $20 million on each of them, that was a huge exposure for us. So we're trying to mitigate some of that going forward.
Are there any set amounts that are published about that? Or is it really just we look and see?
It's really we look and see, because it truly comes down, it's so individual, because it really comes down to how much they're together. So if you have business partners, but they live in different places and they're only together at Christmas time, say, that's not going to influence the outcome. But like I said, if they're in the office day in and day out doing the same, together 80% of the time, that's a bigger influence on if there's an event.
Okay, got it.
Oh, I messed up. Okay.
Next one.
So this, we want to walk through how to a large case. And so just to put this out there, so an insured's coming in and they're applying for 100 million, and they currently have 120 million total in force. The ultimate total line right now is 120 million, and they plan on having 120 million. So they're not increasing any coverage at this time, but they have 3 policies, A, B, and C, and they're going to replace A and B, and C is a term policy, and they're not replacing it. So they're going to just swap out basically 100 million. How do you do this? How would you get this to move forward? Because most likely their capacity is saturated or close to saturated in the market. So you can take out the 100 million, since they should be 1035 exchange. So that would free up if it ends up, so that would open up your capacity to go to a carrier. The best way and the most efficient way is you decide which carrier should shop reinsurance before you even submit anything. So from your perspective, pick your top carrier that you want to place this with the most capacity. Tell them that you want them to use their retention and to get as much capacity from reinsurance as possible. And then shop to the other carriers for their internal retention only. And it's very important that this cover letters, I don't see them as much as I used to. They've kind of gone less frequent, but they're very important to us in underwriting. If we know you have control of this policy and where it's going and who it's going to and all of that, it helps us to stop any red flags. So even if one of the other carriers comes in that you said please don't shop to reinsurance, if they were to approach us and say, well, what can you give us? Which happens, believe it or not, it does happen. We have your cover letter in our file too when they send it to us for fact. And we go back to them and say, but we have this that says this carrier is supposed to be the one shopping to us, not you. What's going on? And if they say, oh, we're just reaching out, then we'll say, no, we're going to work with this one until we hear otherwise. So we kind of stop it right there and try to control it. But if we don't get a cover letter and we just start getting all of these inquiries, even capacity checks. So they may call us without even sending us papers just to ask what capacity we have available. We still track that internally and we'll say, whoa, wait a minute, we just got a phone call yesterday on this. Why are we getting all these phone calls? Who's got the formal app? Who's got control of this? And you can understand how it can get so confusing very quickly, and to know what the total line is going to be and how much true capacity is going to be needed from us, etc. So really diving into those cover letters and spelling these out for us is extremely helpful and very efficient in the process. And this is kind of like my big thing is the cover letters, because on the cover letter, you guys have the ability to give us any information on the case and tell us how financially it's justified, how you determine the amounts, how it's the product, and if it's premium financed, or if there's significant medical history that may influence the underwriting class. All of that disclosure is it just makes it so easy, because we read that first and we go in really already understanding the case. If there's trusts involved, if there's, how much value is in the trust, if it's a juvenile, it's a much different process too, if they have trusts, because we need to know when the principal is going to be starting, when they're going to be starting to take disbursements from those trusts and so forth. And all of that you guys control for us. Otherwise, that's when we have to come back and ask all the questions. So it's very, very helpful to have all of that information up front.
Okay, so
I have a question, unless somebody else has a question.
I just wanted to just reiterate this, because
Well,
I'm doing a lot of this.
Can I ask the question, then reiterate this way? Maybe
it might cover it. Go ahead.
Right. What are you saying, Mary? If we go to the reinsurers first, then go to other company and ask their own, or go to each company and take their retention without going to reinsurance, then go to reinsurance?
So you don't shop to reinsurance, the carriers will. So you pick the carrier that you want to shop to reinsurance.
Mm-hmm.
So you send your app in, you only have to write one cover letter. You write it once and you attach it to any apps that you are sending. So what you'll do is, so somebody throw out a carrier, because I can't say
John Hancock.
Okay, so you go to John Hancock first, and you send that formal app and the cover letter to John Hancock, and you say, we want you, John Hancock, to shop reinsurance and give us as much capacity as you can get. Then the other carriers you may shop to are
Lincoln Financial.
Let's go to let's take a small company. Let's say a company that could carry only 10 million. What do you do there? You
would only ask them for their capacity.
Yeah.
Okay, so we go to reinsurance first, then go to other companies for capacity. Is that what you're saying?
To fill in the rest of the capacity that you need.
See, I always thought you go for capacity, then go to reinsurance, but now I learned something. That's it. I'm done for the day. Thank you.
No, that's exactly why we're having this conversation, because especially you, because this comes up. People have this wrong information that they should go to these carriers and get their retention and do piece. Wrong. And this is why Total Financial does this, and I've done it. I've got to tell you 10 times in the last year, okay, for $100 million policies regularly. You go to one carrier and we go to the carrier. Kim picks up the phone, Liliana picks up the phone and says, we're coming in for this amount. This is the amount in force. Go to your reinsurers and find out how much is available. Because if the person has insurance in force, Isaac,
yeah,
you don't know, even if you say I placed, 30 million with AXA, right? You don't know how much of that quota share the reinsurers were actually on with that particular company. And I just use AXA as an example. So we always query first, and then we always will make a carrier our lead carrier to be the one that talks, because a lot of them overlap and will share the same reinsurers.
I will always go to you first anyway to ask you.
Yes, you
And
will.
stop saying wrong. I don't need you and my wife saying I'm wrong.
I'm sorry.
I'm just kidding you.
No, I will actually make a mental note of that, because that's not something that you should.
No, I'm just kidding you.
On the other side of this is, I recently had a case that I did with Principal where I placed 38 million with them this recently at the beginning of the year. And the agent just came back to me and said, okay, I need 120 million more for a loan because it's on a key man and I need 120. So I immediately started with Principal, because why wouldn't I start with Principal since they already did the 38 million, as opposed to going and jumping to John Hancock and starting with them from brand new.
Right.
I'm letting the Principal take the lead and say, look, you already did the file. You already know the case. You go to reinsurance. And they came back and said, we'll get you 61 million. So they're giving me the 61 million out of the 120. And then I'll backfill the rest of it with the other carriers.
Got it.
And that's all with an application, or I will call and ask and say, okay, how much do you have available? But again, like Mary, that was all spelt out in the cover of saying, this is what's in force. This is what we're applying for. This is the purpose of the loan. And we're only going to this carrier for this amount. And then, the next ones will come in and we'll do the same thing over and over again.
Thank you.
And with your example of the 90-ish million, the client's going to see that it came from Principal as far as the application, as far as the policy goes. But there is diversification, which we can explain to our clients, right? Because it's with different reinsurers.
You don't really have to have that conversation, and you probably shouldn't even need to have that conversation at all about that reinsurance is even involved, because when it comes down to the claim being paid and who your client is dealing with, they never deal with the reinsurers. They'll never talk to the reinsurers or see them.
But sometimes clients don't like to see one company's name for all of the insurance.
But you're still, that application has that one company's name. So you're not in a place to say, and Mary, you can, add on to this, but you shouldn't really be saying, well, even though you're applying for John Hancock for 90 million, they took 65 and then the rest was taken by this reinsurance company, because number one, they don't even tell us sometimes who the reinsurance company is that they're getting. And they never see the papers. They would never be involved in any part of it. So you have no evidence that that company is even part of this offer or the policy. What you want is diversification as far as when that comes to say, I'm going to go to John Hancock for 65 million. I'm going to go to Lincoln for, 30 million and Prue for 10 million. That's where your diversification is, period.
Yeah, don't bring the reinsurers even. Most applicants and insureds don't even know. They don't understand reinsurance or anything, the different levels. They don't even understand the pools. They just see that they have a policy from company A, and that's all. I can tell you in my career, I have had one insured call me, and no one is actually, you guys shouldn't even know how the cases were split up and which reinsurers took what. You really shouldn't. And it's to keep us silent. And because we don't have technically the contract with the insured, it's through the carriers that we contract. So well, now that I say that, I've had two insureds call me in the past, but they're not supposed to. And I've had one of them, a producer gave out the contact information, and another one, it was the direct carrier gave out my information. And the one wasn't nice. Security, actually, they had to get involved in everything because I was threatened. But that's mostly why, is because some of the people can get hostile.
We don't tell them, but Mary, you're mistaken there, because to tell you that, I in the past, I've written large cases in 140 million. And the client was concerned, what if the company get in trouble paying my 140 million? And I'm thinking of my wife, I'm going to put 60 million. I always tell them that if it comes up, the companies don't carry the whole risk. They reinsure it. But we don't tell them Swiss Re or General Re.
Right, that's what I mean. They don't need to know which reinsurance
Right.
company was involved, and the direct carriers shouldn't even be honestly sharing that information on how it was split up.
We don't know.
Yeah, it's as long as you get what you need, and they went to reinsurance, that should be plenty information to know that there's security in if something were to happen, the death benefit can be paid.
Okay, thank you.
And to be honest, we've seen so many mergers over the last 20 years between, the reduction in reinsurance, the reduction in direct carriers. Someone always takes that business. It's merged and transactions are done. So at the end of the day, you may place 65 million with company A, but one of the reinsurers has been purchased by, the block of business has been purchased off. So that reinsurer may not even be the one paying out the death benefit when it comes due.
What's the maximum life insurance can a person have on his life?
Whatever they qualify for.
If Zuckerman comes in and says, I want $2 billion of life insurance because I'm worth 40 billion, and I would like to offset some of the taxes. No, let's even take it bigger. I need 10 billion.
You can't.
You can't.
You can't. I mean, I'm looking at the jumbo 220 million. I honestly, Mary,
you'd have to go to every single insurance company and get retention. And then one of those companies would have to go to every single reinsurance company and get maximum retention. And what I mean by retention is capacity, but you can't put that much together. There's always Lloyd's. They can go to Lloyd's and get,
whatever they need.
Yeah, a lot. Have you seen 300,000?
300 million, you mean?
300 million?
Back years ago, yeah.
I haven't. I mean, that's not even.
I think that was probably the max. I actually think I had a family. I think I had a family where one of the gentlemen was at 4 something, and that's why I brought up juveniles, because that family, he was at 4 something, and he had the kids, and he wanted 100 million on each of the kids, and then his wife had 200 something million. But that was those policies him and his wife's policies had been enforced for a long time.
Okay, so that's like the family. So, and I've never seen,
in today's world, it's not possible.
This number that you put up here, the 220, I would say is realistic. Mm-hmm. And that I could probably fill this with capacity with the carriers that we do business with.
What if it's second to die?
It's still the same amount. So second to die comes in when, from an underwriting perspective, and from our perspective, it's based on the amount applied for. So if it's second to die, it's not that you get 100 million on each of those. It's 100 million and it's not paid out until the second one dies.
Second death.
Thank you.
So one thing I wanted to mention too is these, and you guys, I'm totally confident that you know this, but if we do come back, whether us or the carriers come back and ask a question that you think like, for example, are they applying with other carriers? Or did they apply with someone not listed here? That actually, we're trying to tell you, we know they did, and we need it disclosed. So this summer I worked on a case that the applicant went off on his own and had 2 producers going. And so
never happened before.
Yeah, never happens. Totally flooded the market. And on some applications, the applicant admitted. So when I ended up getting 3 applications, I was able to put the whole picture together, but I actually had to go back on the 3 apps and have everything corrected because of the way it was done. And there were 2 producers involved. And so when the questions were going back to the producers were going, no, there's no other apps pending. I told you what was pending. but they didn't know there were multiple producers involved.
Yeah, that actually comes up in like every day, just applying for insurance when people run MIB and we have to tell them all the time, no, I'm sorry, your client, has recently applied somewhere else. I got a question for you. So we sent in a package, and to the best of my ability, I think that I've sent you a complete package. I've given you the medicals, the APSs, the financials, the cover letter. The carrier sends everything to you. There are certain carriers, the Lincolns, that I've worked with for a long, long time. They have very close relationships. How much does the underwriter from the carrier work with you conversational wise on these cases and going back and forth, especially when you have like 5 reinsurers that are in the mix and you're saying, okay, well, reinsurer A over here is asking for 5 requirements and you're asking for these requirements. How do we get this all to be cohesive and not have all of these different offers all over the place?
So I've had that happen on some of the larger cases, and completely agree. I've had one carrier where I had given a large amount of capacity in my offer, and it was subject to, and the person was supposed to have had follow-up medical tests. So I asked for copies of the tests because I had nothing to say that one, they were completed or that they were normal. And we have constant communication on these, especially on these large cases. We have many phone calls going back and forth on these, just so that we're all on the same page. When the direct carrier called me and said, why are you asking for these? No one else did. I said, my question to them was, how much capacity did they give you? And they were only getting like $5 million from the other reinsurers. And I said, well, how much capacity do you need from me? So that actually plays into how much underwriting detail I need on a case too. So if I'm offering over, a significant amount, if I'm going $30-40 million on a life, I need to have all my I's dotted and my T's crossed to make that offer. If I'm only offering a small amount, to get to the total line, it becomes a much different picture. So we have those conversations too. So sometimes some of those are waived, depending on if they come back and say, oh, you know what, we only need $5 million from you and we've got our total package put together. I'm like, okay, I'll do it. But if they come back and say, no, I need that full 40 from you, then I say, I'm sorry, I have to have it. But that's the reason, is because we're looking at different exposures. But the Lincolns, the Hancocks, all of those, we have extremely good relationships with them. We are on the phone with them all the time, or at least communicating through emails. And it's a partnership. The reinsurers partner with the direct carriers, and nobody makes any money if we can go through this whole process. At the end of the day, if the policy's not placed, no one gets paid. All the time that you guys spent, all the time that direct carriers spend, all the time we spend, no one gets anything. So at the end, we all partner to get these placed. We want them placed. If we're going to spend this much time and energy on them, we need to get them placed.
And what's the time frame? Because obviously with everything that's happened with COVID and all the carriers right now who are, for the most part behind, are you guys, if they send you a package, what's the typical turnaround time for you to get back to them?
So it's probably, for these larger cases, it's 3 to 4 days. And the reason from the Swiss perspective is we do a activity check globally, just to make sure, because we have so many offices around the world that and there's time changes and lag there. And so we just have to make, like I said, if we're making the full offers, we are definitely having to make sure that we follow all of our guidelines.
So hypothetically, if you get a case from that carrier, you should be able to come back with your offer of the amount and everything within a week.
Yes. easily within a week.
And if you do have carriers where like you do have, and then this happened last time, where you have like a Lincoln and a Prue that are working together, and I can say, okay, I want this one underwriter to be the lead underwriter. And I want, even though they are both going to Swiss, but I want one underwriter to be the communicator for both carriers, because
That's happened. I think I was on that case. I think I was on that case.
You might have been.
I think I was the underwriter on that case. Was it a the underwriter at Lincoln? Was his first name John?
Yes. Well, yeah, that would be it.
Yeah, that's that case. Yeah.
So
yeah.
That happens, right?
Mm-hmm. And so if you want, and that's okay. We would rather have someone take the lead on it. And then we've even had it, and I think this is the same case where we gave so much to Lincoln, but then you wanted it swapped up at the end. And so at the end of the day, we still have the same exposure on the life. And from our perspective, if X goes to Prue and Y goes to Lincoln, that's fine with us because our exposure doesn't change from what we've underwritten on.
Mary, who determined the underwriting class of the client? Do you get involved with that? And if Jen Hancock said, we think he's super preferred, do you have the right to come back and say, he's just a regular preferred or standard?
We can, but that's a partnership between us and the carriers. We try to at least match their offer, if not improve it. So if they're at their best class, they usually, they'll tell us. Lincoln, Hancock, all of them tell us what class they're at, especially if they're in one of their preferred categories. Because each client has their own set of preferred guidelines. And that's what we underwrite to.
What if you disagree with the class? What if
we have a conversation with them and ask them how they got there? And it could be that they have some special program that it got put in, and that's how they got there. So we do
honor the program.
Yes,
you will.
Everything's priced for it in those treaties. That's why it's all spelled out that way.
All right, thank you.
So yeah, we do work with them, but even if it's a substandard case, so say that they came in and they sent it in and they said, we see this at a table 3 due to the diabetes history. And we look at it and we get a worse scenario for underwriting class. We have a conversation with them and say, just to make sure that we all have the same information, and see what we can do to at least match that table 3 offer. Mm-hmm. And it could be that we didn't get a piece of data that we needed in the case, and that made the difference. It could be that the client underwriter missed something in the file that we thought was pertinent. I mean, we're all human. So that's why we have the conversations, to see where is the disconnect and how can we get together.
So you do underwrite it as an underwriter yourself also by looking at the case from an underwriter point of view and try to either agree or disagree, or then have a conversation if there's disagreement.
Yes.
Thank you.
But Isaac, honestly, generally, and I think there's a big difference between this and facultative. Like when we say to a carrier, go out to reinsurance and get a better offer, right? Or try to get a better offer, and then they can go to reinsurance and shop the case to reinsurance, get an offer. But my experience with the larger cases really has been, once, a John Hancock or a Lincoln or a Prue, I mean, I can't even tell you, I don't even remember when this has ever happened. But once they have made a decision on a case and they package it and send it out to the reinsurer, they have always come back with that same offer. They might ask for a few more requirements than the actual carrier has, which Mary has, very clearly pointed out, where they have so many resources, they might actually want a few more things to be answered. But I haven't really had them overturn. And that's really because they do work and spend so much time together, reviewing and looking at their whole book of business, that they are comfortable with these decisions that each of these carriers have made for years and years and years. Yes, they're still looking at the file, but 9 times out of 10, they do go along with what's been proposed.
Well, Diana, how about when I hear this, we have an offer as a standard. However, if you want to, we can take it to reinsurance, but if they come back with a worse offer, we have to live with that offer. So it's not that clear cut.
Totally two different, that's exactly what I was talking about. That's the 2 different scenarios. So that's like a shopping scenario.
Mm-hmm.
And when somebody offers that, and there are other companies that like do it all the time, where they'll say, I'll go out to reinsure. And Mary, you can chime in here. That's different than what we're talking about of, you know, these jumbo cases where they're going out to get the approval of these reinsurers for these large limits. That's actually them shopping and quoting on a case.
Yeah, so when it comes to, they have to say that because that's what the contracts say between us and them. But honestly, unless there was something blatantly missed, it doesn't happen. And yeah, and most of the, like I said earlier, most of the time, these large cases, it's mostly a capacity shopping. If you have an applicant that has a medical history, like a diabetes or a coronary artery disease or something, that's a little bit different. But most of these large cases, it's really truly a capacity shop. They're just looking for additional capacity to pull it all together for you.
Thank you.
So we have like 9 minutes left. So the next slide kind of dives into a little bit around 1035 and premium financing.
We can always have another meeting. This is interesting stuff.
Yeah, I'm happy. And I can even stay on a little longer if you guys are available. I don't know what your schedule is, but just wanted to mention when it comes to the premium financing that one, when you submit premium financing cases, we like to see the illustrations. We like to know the exit strategy. We like to know the skin in the game, no free insurance. Those are red flags. If that's a big red flag, if it's sold like that. We don't want anyone to think that they're getting free insurance. They have to have some payment, whether it's the annual interest on the loan is paid for by them, or they have a dump for so many years, a significant dump of the premium themselves in something. They have to have some skin in the policy.
Skin in the game is what we call it.
It's what we call it too. But if you are replacing on your new apps, if you have a 1035 replacement and it's premium financing, we get concerned when it's not in, we need to know the exit strategy. So if the cash value of the in-force policy doesn't cover the loans and have enough to keep the policy in force, that's a flag to us, because we want to know what is the best interest in the insured of having that policy replaced at this point, where if they waited another 2 years, instead of the policy being in the red or break even, it could actually, you know, earn them money. So I've seen that more over the last 2 years, starting to come up with the low interest rate environment happening. But I've also seen cases where the surrender values are very large, and we just don't want to do that to an insured. And part of it is we don't want them getting upset, and we don't want regulators, you know, starting to investigate all that stuff too, because regulators, if they come in and start looking at how the replacements and stuff, everyone's going to get checked off, you know, is what are you doing? How are you handling it? And right now, I think the process is working. So we don't want to muddy the waters there. So just understanding the value in the replacements of 1035 premium financing cases is very, very needed.
If somebody's doing a replacement and they are doing a premium financing, do you ever get involved with the premium finance company, or do you let the carrier this is just coming to my head because I happen to be dealing with a really ugly scenario right now. Do you let the carrier actually ask all the information that you need, or have you ever gotten on the phone with the financing company to go through the case?
We do not get involved with the finance companies. So the carriers have the advanced sales team, and their advanced sales team is usually made up of CPAs and lawyers that vet out the financing programs. And they have to approve them. And these are included in the treaties. And we review what we review is their premium financing guidelines. So usually an age, maximum age limit, minimum age limits, how if the annual interest is paid by the insured or owner, etc. Those guidelines is what we agree to. And then they actually are the ones that vet the financing companies. But from what I understand, there's about 3 to 5 that are very good finance companies. And then beyond that, they can kind of get
muddy,
noisy, muddy. And then the premium financing, is always a program that's going to be scrutinized, especially back from the early 2000 era and the Stoli and all of that. So it's just watched for red flags.
Okay. So does the next slide cover that lovely subject matter that I brought up on our call regarding the option B on illustration, increasing death benefit, and how we take that into consideration?
I have that note and I was going to speak to it. You can move on, Dan, to the next slide. So any rising death, like a paid up addition or a return of premium riders or anything like that, we actually suggest projecting out 20 years, and that's what we underwrite. That's what carriers underwrite from. And they may not even, in some of those riders, they have to exercise the options, right? But, and some of them are just automatic. So we actually have to hold that amount when we underwrite, even though it may not even hit the amounts. But the projection is 20 years is what we use for the number to underwrite from.
I'm not too sure I understand. I'm looking at a case now that starts at 100 million. And it will be eventually 400 million. How do you assess that case?
So
over 50 years.
Yeah. So I'll be out by then. I'll be gone.
Too young for that. Anyway.
So I'm not worried. So it's already over jumbo. So that's good.
No, would you accept it and don't worry about it? I'm not going to be around either.
Yeah, I'll be gone. Somebody else have to worry about. No, we don't want to dump it on somebody. But so what we do is when we make our offers, we start out with the offer they've asked for, and then we say the maximum amount that can be ceded to us, and the total maximum, and it's that 20-year projection.
Well, let me see. Is Scott there?
Yes.
Hey, Scott. How do you, when you look at a premium finance and the death benefit is increasing, how are you going to get it through insurance company and reinsurance? We don't have Scott.
He's on mute. But so the NAR is the most important thing when it comes to that.
What's
so as the value, the cash value increases, the death benefit may increase, but the NAR, the net amount at risk, goes down.
Oh, got it. Okay, so since there's more cash value, it works out.
Yeah. So if it's a 4 million, if it grows to 400 million, but the actual death benefit ends up being 60 million, everybody's come out, okay.
Okay, makes sense.
Yeah, that's, Isaac, like we've played this before where especially if somebody has, a very, very large dump in on a policy and they're applying for insurance, and I have to turn around to the company and go, well, you're getting, 2 million of it up front, and that's got to offset some of the risk that, you're actually looking at. It's kind of, in my opinion, apples to apples, the cash value that they have in the policy, decreases their risk.
Yeah. Okay. Especially if it's a lump sum.
Yeah.
Mm-hmm. And sometimes, those lump sums drive those face values up really high just so they don't mech out and things like that. So, we take that all into consideration. We do look at the policy setup holistically, and where is it going, where's it growing, and what is the net amount at risk at this from day one versus 5 years, 10 years, 20 years.
Perfect.
Okay, that was a really important one for me to hit, because that death benefit option does come up, especially on those cases that you're working on. So I wanted to make sure that is in the forefront.
Go back to that screen one more time. That screen what shows increase in death benefit.
We don't have
that was just the questions.
Yeah.
We had a pre-meeting, and that came up in the pre-meeting. So I wanted to make sure I touched base on it.
Okay, you guys cheating. All right.
Yeah, I didn't get to do a screen on it, but I'm sure that we can help if we need to eventually, if you want something. We work very closely together. So I know we're at the end of the hour. We spent a whole hour on this subject because we felt that it was really important to cover all of these questions and to really give you this information, because especially right now with estate planning, we're all seeing a lot more large cases. So this is really coming into play much more. There was going to be a totally even separate section to this one webinar, which was even going to talk about the future and the different things that are going to be, you talk about wearable devices right now and what's being used. As far as, I'm just throwing it out as, you guys know what John Hancock is doing with their wearable devices, but in the future, reinsurance right now is working on, what devices are going to be used in the future and things that they're going to be using to, in addition to the background data resources that we're using to help make decisions. And I took that out of this call because I really thought that could just be a call on its own. If you're really interested in knowing about some of the things that they're working on and what it might look like in the future, if you want to let me know, please do, because I can always call these lovely ladies and gentlemen and say, let's do another one and we'll focus just on that only. But for now, we hope that, this has given you a little bit of insight of what we do and how we have been working on your cases and with the reinsurers and what you should expect when you're doing these large cases, which I know you're all working on.
And I just want to add that we are working for you. You guys are at the beginning of the process, but like I said earlier, we're all in the same business to get these placed. If they don't get placed, nobody gets paid, and we've all spent a lot of time for nothing. So it's very important from our perspective, that these get placed also. We're there to help the carriers get as much as possible and get these set for you. And we do want to do these efficiently for you. And that's where, the details that you can provide us up front are so valuable when it comes to underwriting, because we get a good synopsis of the case before we even look at the application. And not saying that it kind of does give us background. And if we can understand how you financially got to the total line and you can spell it out for us, we're good. We may not, we still need those third-party financials just to verify the numbers are there, but otherwise, we wouldn't come back and ask for any details on how you got there, stuff like that. And then the other thing I did want to mention, there are the new data sources that are out there, disclosure. We are seeing some undisclosed information, and the data sources are out there to help us make the user experience more efficient and better, but we still need the disclosure from them. Otherwise, in the underwriter's mind, it goes, what else don't I know about this person? And it makes us question more. So even if there's a criminal history, from years ago, it's better to have it told to us up front than for us to find it through the process.
Perfect.
So I just wanted to share a little tidbit inside information, but yeah, we're all here, but it's been great talking to you guys. And if you find you have more questions afterwards, please reach out, and I'm happy to follow up and answer those.
Great.
Yeah, well, I want to say thank you to our Swiss Re team for this call and our past 3 calls. I think they've been very successful. I want to say thank you to all of my agents and partners that have been on the phone with ideas and conversation and questions, and we truly appreciate that, because I think we all learn when we ask questions. Diane and I and the team appreciate that very much. So, Nicole, do you have a closing word to say?
Yeah, let me just say thank you to everybody. This has been a tremendous experience. I know we covered really a full gamut of topics, and I think we ended on the exact right one. So really productive conversation. Thank you to Mary. This is extremely educational. I love to see the engagement. Thank you to Diana and to Scott for all of the logistics and behind the scenes planning that went on to get to this point. Because I promise, while it's a few hours of webinar, it's a lot of hours of behind the scenes to make sure that we're ready to go. So tremendous, really tremendous. And I think that this is how we move forward in the industry, right? The more conversations we have like this, the closer we are, the better we'll be. So thank you, everybody. And I hope everybody has a wonderful holiday season.
Yes. Happy holidays to everybody. Have a wonderful, happy new year. And looking forward to working with you again and more in the upcoming year. And stay healthy and please be careful.
Happy holidays, everyone.
Thank you.
Take care.
Bye, everyone.
Bye-bye.
That was fun.
Bye.
Bye.